Hi everyone, I just wanted to talk a little bit today about placing an offer on a house. So I'm really hoping you're watching this video because you're in the situation where you think you're going to place an offer or you hope to place an offer. So congratulations either way. To back up just a little bit, before we kind of get into the meat of placing an offer, I want you to really think about, if you haven't done it already, asking your agent to have a copy of the purchase and sales agreement, because most agents, including myself, we use the purchase and sales as the same instrument to submit an offer. So it's a really good thing to read that in advance, to ask questions about it, and to look at all the fill in the blanks, because the fill in the blanks are things that when you place the offer are going to be completed, and you will have complete say into what should go into those blanks, so you really want to understand what it's all about. The other nice thing about the purchase and sales is it absolutely will give you an overview as to what the transaction will look like. You know, it'll talk about inspections and title and all sorts of things. So read it and you'll feel, I think, much more empowered and confident in this process. So the number one thing to think about in placing an offer is sales price. So that seems somewhat obvious. You know, hopefully you have your pre-approval letter all set. You know what your max is on the pre-approval letter. However, I would still make sure you touch base with the loan officer, go over the terms of the offer you're thinking of submitting, and have the loan officer crunch the numbers for you so that you do feel comfortable with that monthly payment. So I wouldn't just go with the maximum amount listed on the pre-approval letter. All right, but sales price, you don't want to just kind of pull that out of the air. You want to talk with your agent and get a sense from him or her as to what the area homes that are like this one are going for. You know, so normally we look at probably about a mile radius, homes that are similar or somewhat similar, and within a fairly short time frame. So, you know, that's going to give us a sense as to value. Oftentimes, at least for myself, I feel like the best time to analyze pricing for a home is after I've seen the home. So I try to accompany my buyers, even if it's an open house. I want to see the home, I want to see the neighborhood, and I can make a much more intelligent or have a much more intelligent thought process when I go to analyze and think about pricing for that home. All right, so sales price, it should be competitive. It should be within, value, but it should also be kind of what you think you can do for your highest and best. Because in this market, but certainly in other markets as well, you may only have one chance. A good way to kind of think about it is, if another person was to place an offer and, they did it at a number higher than yours, but you could have done that, and that gives you some sense of regret, then, maybe it's not your highest and best, and maybe you need to kind of think about raising that number. But again, affordability is key, and always, always, always talk to your loan officer. So what comes after sale price? Deposits. You have the offer deposit and you have the additional deposit, also referred to as the earnest money deposit. So the offer deposit is exactly as it sounds. It accompanies the offer. There are very flexible ways to pay that deposit. I just want to mention, and I know it sounds really common sense, I almost have to apologize for saying this, but make sure you have the funds in the account to cover the deposit amounts. You just don't want to run into those unnecessary problems. Talk with your agent too as far as what is typically seen for your deposits, okay? The additional deposit, it's also called the earnest money deposit. This is one that tends to be a little bit meatier, and the reason why is that the seller can hold on to the deposits if, God forbid, you default. And I know you won't do that, but it does give the seller some assurances or a safety net that if it doesn't work out with the buyer, they may be able to have access to the deposits. So that's important. So you want to make sure that you're telling the seller, yes, I am serious. So you can't have the number be too small, and then you also don't want it to be kind of a punch in the gut either, so that it's just, you know, draining you. You've got to kind of find that happy medium and have it work for the seller, but also have it work for you. Just as a bit of a side note with that, the deposits are held in an escrow account, and those deposits do contribute to the down payment. So it's not as if you've got the deposits that you have to pay and the down payment that you have to pay. The deposits contribute to the down payment. So it's not extra money. It's really, if you want to think of it as money up front. All right, and so those are important. The other thing you'll see on the purchase and sales is the balance due. So what happens there is they take the sale price and subtract both of your deposits, and then you will see a balance due line. The next part of the offer is the one that really takes significant thinking if you haven't already started with your significant thinking, and that's the mortgage contingency section of the purchase and sales. And I actually have my cheat sheet in front of me because I just want to hit on the really important points, and the things I'm going over today are things that buyers struggle with in terms of making decisions, and that's why I feel it's important to kind of give you this information. All right, so mortgage contingency. The commitment date is part of the mortgage contingency. So what does that mean? What it means is you've had your pre-approval for a mortgage, but when you're actually under contract, you have to apply for your mortgage. And I would suggest getting on the phone with your loan officer once that offer is accepted and you have a signed contract to apply for your mortgage, okay? Because this commitment date will reflect when we feel, you know, our best prediction as to when your mortgage has been approved. All right, so that's kind of like a somewhat simplistic way of stating it, but essentially that's what it means. And your lender or your loan officer should be contributing to that part of the conversation. The other thing, as a side note, and I'm not going to go over it because it's not in this mortgage contingency, but the loan officer will also help to predict the closing date, because, you know, that's really their thing. Okay. All right. The second thing is amount not to exceed. So what that means is, you know, now you've kind of got your purchase price in there or your sale price in there. You will have a down payment which is unique to the loan product that you have. So you might have a 3.5% down payment. You might have a 5% down payment. So what happens is the sale price minus the down payment is going to give you the loan amount. So the amount not to exceed really is the sale price minus the down payment, okay? That's what the bank is going to finance you for, all right? So that is reflected in the mortgage contingency. The interest rate is in there. So really what we mean by that is, in a sense, what is the maximum interest rate you could go to? So that's important, and some folks make an unfortunate decision of putting prevailing rates. So what that means is, you know, the rates could shoot up, and because prevailing was entered, you have to live with that. So really you don't want to do that. And again, that will be part of your conversation with the loan officer, is to say, you know, what should I put in for the maximum interest rate? You know, if the interest rate today is 6%, can you go to 6.25? Do we need to leave it at 6%? So have that conversation. It's a huge one, and it could ultimately be a safety net for you if the interest rates shot up. And I hate to say that because I want to see everyone get to close, but you just don't want to bury yourself and put prevailing rates in and, you know, not have that safety net. especially in today's market. All right, so on top of that, it will say term of at least, if you're a first-time home buyer, it might be 30 years. It could be 15 years. So that's really the length of the mortgage, I guess, is the best way to say it. And then the maximum number of points. So sometimes people put 0 points, but it can be more than that. And again, that's a conversation point with your loan officer. A point, for those of you who are not familiar with it, a point is something that you can pay in order to bring the interest rate down. So again, that's a conversation point with your loan officer. And it is something to consider if you have the money in reserves and that piece isn't an issue for you. Certainly could be something for you to consider when you go to lock in your rate in particular. It may be worthwhile for you to do that, but everybody is in a different situation. What works for you may or may not work for someone else. All right, so those are the really, really big things for mortgage contingency, and those are the things I have to say most people kind of struggle with in terms of, gee, what should I go with? So think about it in advance. Okay, I think I really hit the key points there. Okay, and then finally, I guess the last thing I would say is that there are a number of fill in the blanks on a purchase and sales form. We did not go over all of them. And one thing I really can't stress enough, and I get really repetitive about this, but when you are under contract in particular, pull out that purchase and sales, reread it, make sure you know what is due when, okay? When is the commitment date? When does the inspection period end? How long do I have to apply for my mortgage? There are a lot of dates in the purchase and sales contract. Whatever it takes, grab a big calendar, use your phone, put in alerts, but make sure you're very aware of the due dates. Okay, so going through the filled out contract and writing down everything that has a date attached to it, and then rereading and make sure you have all of the dates, because ultimately it really is up to you to be on time. Now, as an agent, I can tell you right now, I am on the dates. I am going to remind you. However, agents are human too. So the more people looking at those dates, especially the buyer who has so much to either gain or to lose, you want to make sure you're on top of things, okay? And I can tell you that there are dates you want to pay attention to from, day one of the contract to the closing date. Okay, so be aware of that, have your strategy, and good luck to you.